Hi, and welcome to Energy News Bulletin, Australasia's most comprehensive podcast covering oil and gas and new energy markets, brought to you by Aspermont Limited. In this podcast, we look at Invictus Energy, listed on the ASX, trading under the ticker IVZ. Invictus Energy might be headquartered in Perth, Western Australia, but its asset focus is in the sub-Saharan region of Africa, in Zimbabwe. Zimbabwe holds some of the world's largest coal reserves, but the nation has a deepening electricity crisis. Power cuts plague Southern Africa, and since his appointment last year, Zimbabwe's Energy and Power Development Minister, Fortune Chazi, has been working with Invictus Energy to find a solution. From a broader perspective, South Africa is also facing dire energy supply shortfalls, but this could change, largely due again to Invictus Energy. It holds a swathe of acreage across the Cabora Bassa basin. This acreage is estimated to hold more than 9 trillion cubic feet of gas, which once developed could hold the answer to Southern Africa's power problems. I'm joined this morning by Invictus Energy Managing Director, Scott MacMillan. Scott, hi.
Hi, Paul. Thanks for having me on the podcast.
Scott, you're the founder and managing director of Invictus. You yourself have decades of experience in the resources industry. What was it that attracted you to the Cabora Bassa basin?
Paul, I'm a reservoir engineer by background, and that's a relatively technical base for it. And I've worked for companies such as Woodside, Armour Energy, and most recently at AWE, and that's in the exploration, appraisal, development, production, and also commercial aspects of the business. I've been fortunate enough to work on some of Australia's largest offshore and onshore oil and gas developments. And prior to Invictus, I was in charge of the Waitea gas field. And that's been the largest onshore gas discovery in Australia in the last 40 years.
Huge.
And so we worked up that development, and ultimately it was taken over by Mitsui. And that was because a resource such as the size of Waitea is pretty strategic. From a Zimbabwean point of view, I'm from Zimbabwe, as you can probably tell from my accent. My family has a long history there, and I'm intimately familiar with the jurisdiction and the business environment over there. The country hasn't really been viewed as an E&P jurisdiction for the last 20 years or so. And that's in spite of all the activity going around in the neighbouring countries. Mozambique, South Africa, Namibia have all had sort of fits and starts of exploration activity over the last 20 or 30 years, but Zimbabwe's missed out on that largely because of the political environment that was present during the Mugabe era, particularly in the latter half, which made it uninvestable. Coupled with its relatively unknown geopotential, it means it hasn't been really on people's radars. However, I came across the Cabora Bassa project that we now have nearly 10 years ago. I was actually looking for a coal bed methane project in the country. It's got established coal bed methane resources there and very, very low risk in terms of its geological side for coal bed methane. But when I came across this conventional acreage that Mobil had once explored throughout Zimbabwe and Zambia, saw it in a different light. So Mobil had been in the country in the late 80s, early 90s. They did a comprehensive exploration program. They spent nearly $30 million in today's money acquiring geochemical, gravity, aeromagnetic, and seismic data. And at the end of their evaluation, they concluded it was more likely to be gas prone rather than oil prone. And back in the early 90s, there was no structured market for gas in the region. You had some very large onshore discoveries in Mozambique that still hadn't been monetized by then, which had been discovered in the late 50s, early 60s. And so Mobil saw very little rationale for trying to find even more gas. So they ended up relinquishing the acreage. Around that time, you had a lot of the majors exploring in that part of the world. In Shell in Kenya, you had BP in Tanzania, and with an oil price crash at the same time, a lot of those those frontier jurisdictions ended up being relinquished, and the countries retreated to their home bases, a lot like you've seen in the kind of last 3 cycles that we've had. Those other countries ended up promoting their acreage subsequently when the industry picked up again and the oil price stabilized.
Yeah.
And that was picked up by a lot of junior companies, the Hardman Resources, the Tullows, Africa Energy. And Zimbabwe, however, has abundant mineral resources and didn't think that there would be any interest in gas again. And they probably marketed their mineral potential ahead of their oil and gas potential. A lot of those other countries didn't have any other choice because that was they didn't have the mineral wealth that Zimbabwe has. And so for those reasons, it sort of stayed under wraps.
Yeah.
By the time I looked at it, this was sort of 15 years after Mobil had left, the dynamics had started to change. So you now had Pandentamani, those onshore fields in Mozambique that have now been developed, and a burgeoning market for gas in the region, and different ways to monetize it. You've got the Southern Africa power pool for gas to power. You've got existing gas users there now. So the energy dynamics have changed, and also more importantly, the country dynamics have changed as well. With the new government coming in, open for business again, changed a number of the prohibitive and draconian investment laws that were present. And so now you've got both of those factors, which are good geo potential and decent above ground conditions, which can now facilitate exploration again.
I really like the story of Mobil. Can you tell me a little bit more about that? Because from an outsider's point of view, the fact that Mobil had been there, they'd already conducted seismic, but nothing really came of it. And that was quite a win for Invictus Energy.
Yeah, that's right. And as I said, when I first came across this, I really liked it because a lot of the technical aspects of this had been de-risked through Mobil's work. And fortunately, you can do a lot worse than going into old Mobil acreage that they've explored. They do a very, very thorough job, collect great data sets, and they actually left a climate-controlled storage room that they built at the Geological Survey that was housing all of the original field tape data, the seismic, gravity, and aeromag.
And that was on film.
Yeah, so those are on those old 9mm tapes like you have in the, I don't know if you remember back to your school days and the projectors that recorded on those magnetic tapes. And so we were able to go in there and digitize them and gather the data off them, and then apply new computing power and processing techniques which have advanced in the last 25 to 30 years since Mobil actually acquired the data. So it was a very, very low risk and low cost entry for us, and that we benefited from Mobil's previous campaign, which meant that it sort of overcame that jurisdictional aspect of Zimbabwe, where we could go in, evaluate it for relatively low cost, add a lot of value through this work, and then bring in a partner with us, which you would ordinarily have to do at a much earlier stage.
Yeah.
So we've been very fortunate that Mobil left it in such good condition and did a lot of the groundwork for us.
Well, it shows how far, I guess, oil and gas technology and science research has gone in the last 25 years. You've now analysed your acreage. It's certified to have around 9 TCF of gas. That's quite hard for those of us on the outside of industry perhaps to understand or quantify. Can you tell us just how big that is?
Sure. So our prospective resource has been independently certified by both GTEC and NSAR, Netherlands, Sewell & Associates, who are independent resources evaluators. It's not just large; it's elephant scale.
Yeah.
So for those not familiar with that terminology, elephant scale are resources of 1 billion barrels of oil equivalent or more potential. So 9 TCF, to put that in perspective, it's about double the size of the Pluto gas field offshore Western Australia. And Waiatia, the field that I mentioned earlier, which has been the largest onshore gas discovery in Australia for 40 years, is just under 1 trillion cubic feet.
Yeah.
So not only is there a lot of gas, but also potentially a lot of liquid associated with it as well. So condensate, which is a light form of oil, and that's just under 300 million barrels of condensate as well. So To put that in perspective, the Dorado discovery that was made by Santos and Carnarvon a couple of years ago in the Beedu Subbasin.
That was the most exciting discovery in Western Australia.
It's a fantastic discovery, and that has been the largest oil discovery in Australia this century.
Yeah.
So we're dealing with something that is pretty substantial.
Yeah.
And we're chasing a pretty enormous target, and we can do that with one single well, which is pretty exciting. So your risk versus reward for going into a frontier jurisdiction that's undrilled. So this is wildcat territory.
Yeah.
You need to have those sorts of prizes in order to justify that risk. But because it's onshore, it's low cost. There's a lot of infrastructure in place. It makes it a much, much easier proposition.
Talk me through Zimbabwe's energy situation as it is currently. I've read reports that the nation suffers extensive blackouts for much of the day, and that the government is working really hard to take the country into a new era of energy development, if you like. But can you paint us sort of a picture of what that looks like? Sure.
So the energy dynamic in the region is quite interesting. You've got, and I'll talk about not just Zimbabwe, but sort of Southern Africa in general. So in Zimbabwe, you've got a mix of hydroelectric power, which is about 50% of the generation, and coal-fired power. In South Africa, you've got about 90% coal-fired power. In Zambia, you've got about 90% hydroelectric. And in Tanzania, you've got a mix of hydroelectric and gas. Now, it used to be coal and heavy fuel oil. And so there is already a lot of renewable energy in the region.
Yeah.
But a lot of this is affected by drought. Coupled with this, you've got a lot of aging coal-fired power, which was built 40, 50, 60 years ago, which is starting to get to the end of its useful life. And so what we're seeing now is a population that's increased. Demand for electricity has increased. Supply hasn't kept up.
Yeah.
And coupled with the drought that is experienced relatively regularly, you end up having quite short supply of hydroelectric power. And so now it's gotten to a critical phase where it's actually hampering industrial development.
Yeah.
South Africa, Zimbabwe, Zambia all have regular power cuts. And so if you're in business and an industry trying to plan around these, whether you're a miner or a heavy industrial user, it's very, very difficult. We saw the effect that it had in South Australia with just a kind of one-off event. These are happening regularly in that part of the world. So power is a huge challenge, and you've got a lot of your larger industrial users now searching for independent power producers to try and guarantee a regular and reliable, as well as affordable source of electricity.
And I guess that's where your acreage could really firm up their resources or supply.
Yeah, that's right. And I think now looking at gas to power, it's a very, very elegant solution, particularly in this part of the world where you've got the Southern Africa power pool, which connects the electricity grid from Cape Town all the way through to the Congo. And so if you're anywhere along that line, you can export electricity to any other country within that region.
Yeah.
You don't have to pipe the gas to site to get it into the grid. You've got a virtual pipeline that you can export molecules through by generating electricity. And so you can supply power directly to South Africa, to Namibia, to Zambia, Botswana, or from within Zimbabwe. And the spine of that grid actually runs through Zimbabwe, and all that electricity trading is controlled in Harare, just down the road from our office there.
So you're working with the government to find a solution. Can you give us a bit of an overview of the upstream side rather of the asset?
Sure. So it is a frontier jurisdiction in oil and gas sense. So to bring investment in requires two things. Firstly, you need encouraging geopotential to warrant the exploration side of things, and our work now, which is built on what Mobil did, has revealed that, and obviously with the sort of size of the prize that we've been talking about, it's obviously very enticing. The second thing is having the legislation in place so that there's a framework that enables the development and commercialization of any discovery.
Yeah.
And oil and gas developments require hundreds of millions to billions of dollars of capital investment over the life cycle, and so you need a really robust framework to govern that and to make sure that the project is taken care of from cradle to grave.
How quickly has the government moved? I mean, you've been given key project status by the government, which is a huge deal. Perhaps you can walk us through what that means, but also how quickly the government's been moving to open up its energy resources.
Priority project status is given to projects that have the potential to make a significant economic contribution to the country.
Yeah.
And what that does is it provides you the relevant avenues to get any impediments or any legislation that is needed to facilitate those investments fast-tracked. So, for us that includes legislation. So we have to make sure that the legislation is compatible with the existing laws so that it stands up. And we've been working hard with the legal teams from the respective ministries of mines and energy. Often the monetization of gas is an issue in frontier jurisdictions because you've got to try and create a market after you've made a discovery, and that takes a long, long time. You've also got the pipeline, easement and access issues that you need to underpin in order to get your product to your customers.
Yeah.
And so what we've learned from probably the Kenya and Uganda experience is that it's all well and good making these fantastic discoveries, which are large and can change, but unless you can actually move your product to market, then no one gains any benefit, and we've seen the stasis. So we've been working hard with the legal teams over there to build these sort of provisions into the production sharing agreement, which have gone probably further than you see in most others.
Yeah.
And so that makes sure that as soon as we make a discovery, we can begin the work to commercialize it, so that the cycle times from an investment perspective are much, much shorter, and that's what a lot of companies are looking for now, rather than these long-dated kind of capital payback scenarios.
My guest today is Scott MacMillan. He's the Managing Director of Invictus Energy, listed on the ASX as IVZ. Obviously, as we record this, Scott, the world is going through an unprecedented challenge, if you like. The COVID-19 pandemic has wrought havoc across international markets, not just here at home in Australia, but obviously around the world. What's your view on this, and how has that impacted your project?
Yeah, well, just for the industry in general, it's been a pretty tough time.
Yeah.
Not only with the pandemic, but also the demand side decimation that we saw during the sort of peak of it a few months ago, where the price of oil dropped dramatically, and that has had a very, very significant impact on companies' cash flows, budgets. Generally speaking, frontier exploration is discretionary spending, as well as other exploration projects. So those are often the things that are cut the quickest and the deepest. So we ended up in a scenario where the potential parties that we're talking to asked for some additional time for things to stabilize, which is completely understandable. And now we've seen the oil price stabilize over the last sort of 6 to 8 weeks, and it's formed a relatively decent base. It still hasn't recovered to where it was in the pre-pandemic levels, and might not do that for a while. But stability provides you the base that you need to plan for the future. There was a period there over a couple of months where the sky was falling in, and it becomes very, very difficult to plan for the future. You're just trying to react rather than look forward.
Yeah.
So it looks like we're through that period now, and we've had actually a lot of pickup in activity over the last couple of months, and we're advancing pretty well now on our farm out.
I mean, I guess the interesting thing over the past couple of weeks has been both ANZ and NAB, two of Australia's biggest banks, have released their forecast of what the oil price is going to do, and they do see it stabilising mainly at the end of this year, which is probably going to work quite well for you. So have you seen any fall off or pick up in that process with your joint venture partners?
We have. So we had a couple of parties which you could probably classify as outside runners. Request some additional time, sort of Q3 onwards, before considering anything. But interestingly, even during probably the peak of what was going on, we had a couple of regional independents come in and start evaluating the opportunity. And I guess some of those smarter companies, if you can call them that, are counter-cyclical. See this as an opportunity when asset prices are low, when service costs for things like drilling and seismic are much lower compared to when the oil price is much, much higher. And so they see this as a chance where there's relatively sort of fewer number of competitors and also much cheaper costs to enable to pick up assets like this. And what you find is that top quartile assets generally work through any price cycle. You see a lot of this, what's going on now, are companies shedding assets that are high cost, high break evens. But opportunities that are top quartile generally can't be bought. They've got to be found. And so what we see is, because we've got this material opportunity, an ability to go in and get a basin scale position with a huge amount of upside and a relatively low entry cost, this asset fits that criteria. And so we're pretty happy where things are at. We're starting to close off that process, and we hope to have some good news pretty soon.
Let's talk about the farm out process, because you flagged that early on in the piece, that you wanted to have another partner join you to develop the asset. Majors, independents, juniors, are you able to shed any light on that?
Yeah, sure. And maybe I'll just talk first about why we want a partner. We've got 80% equity in the asset. It's frontier. It's not without risk. It is wildcat territory, as I mentioned. So this is the sort of traditional path that a lot of juniors take down this road to identify acreage, work it up, bring in a partner to come in for the forward work program, which is what we're doing. Because of this asset type, it attracts the whole gamut of people. It's onshore, cheap entry cost, and high potential in terms of large resource numbers. So it's able to move the needle for both super majors, anything basically over 500 million barrels. That starts to whet the majors' appetite. And this, we're starting to get towards 2 billion barrels for this, of oil equivalent for this asset. So it's well and truly, big enough for the majors to get interested. As well as, your mid-tier independents, juniors, private equity firms. And that's open because it is a much, much cheaper entry because it's onshore. We're not dealing in deep water. A lot of the other times, if you do have an asset in deep water, it requires operators that you bring in with those skill sets that have the capability and track record to drill in deep water and develop assets in deep water. Onshore is a much, much easier proposition. And so
there's just far less infrastructure generally. I mean, you don't need an FPSO or a drilling rig out there per se permanently.
Yeah, that's right. And you've also have the ability to phase the development as well. Offshore you've got your footprints for your platforms or FPSOs that you've got to cater for that govern the size of your development for its entire field life, whereas onshore it can be building blocks and done in a staged manner. So you're able to kind of stage your investment from a capital perspective and develop your asset as the markets develop, particularly in a jurisdiction that, if you're dealing with gas, and if you build it, they will come. We've seen it. We've seen it wherever you've done that. Tanzania is a great example. Mnazi Bay and Songo Songo started out as 20 million cubic feet per day gas to power developments. That's now, and that was in sort of 2003, 2004. That's now up at 250 million a day, generating quite a significant amount of gas to power. It's been reticulated into Dar es Salaam with industrial users now as well. But if you were offshore, you couldn't develop something like that until all of that had been developed. Whereas onshore, you're able to phase it and build it to scale as is required.
And as the market develops. Before we get on to, I guess, where your gas is going to go, I'd like to just ask a couple of questions relating to the asset advantages that have attracted your potential partners. Has there been anything in particular that has sort of really been the flag for potential investors? I mean, you've mentioned large companies and small caps too, and investment funds. What is it about your asset that they've just gone, this is the one?
And it's because of a number of factors. Firstly, it's as I mentioned, onshore low-cost entry. We're dealing with onshore drilling costs versus deep water drilling costs.
Yeah.
So to drill a well, to test something this size, you're looking at, $10 to $15 million. To give you an example, the Cabora discovery that was made in South Africa by Total early last year, they have spent, so they tried to drill this well in 2014. The metocean conditions are pretty awful. They're some of the toughest in the world. They couldn't complete the well then.
Yeah.
They came back last year with an upspec rig that they brought in from the North Sea. And so they spent $200 million on the first attempt. And then they spent $150 million on the second time, and they've made that discovery.
Yeah.
And that Cabora discovery, absolutely fantastic, at around 4 to 5 TCF and a few 100 million barrels of condensate.
Yeah.
So if you're looking at risk, cost, reward, something that you can drill for $10 to $15 million to test something that's the same to double the size at 10% of the cost, is a no-brainer.
Yeah.
So there's that aspect. The second thing is the proximity to infrastructure to monetize it. All well and good being able to discover that, that sort of size resource, particularly gas. Oil is much easier to monetize. You can get it to an international market and send it off to customers globally. Whereas gas, you need either an LNG development where you're, again, shipping it off internationally, or you need a pretty large domestic or regional demand. And that's already existing where we are. So there's established gas markets in Zimbabwe with Sable Chemicals, one of the firms that we've signed a gas sale agreement with. They import gas by rail. For their fertilizer manufacturing process, which is hugely expensive. And so they've been looking for a source of gas for a long time. You've got gas to power, as I mentioned before, that you can monetize through the electricity grid there. Anywhere in Southern Africa, you've got small-scale LNG to truck it off to your off-grid miners that burn diesel for their operations. And you've got a very large existing gas consumption center in South Africa that's been developed out of those onshore Panda and Temane fields that I talked about earlier, that have finally been developed, which is around 500 million cubic feet a day. So that's about half of what Western Australia consumes. Those fields now are in decline. And by 2023, they're off plateau. And so there's a good window at the moment now to fulfill that supply shortfall. Consumption's growing in South Africa. There have been a couple of studies. Power Africa put out a study that estimate that the shortfall of supply in South Africa is going to be around 1 billion cubic feet a day from 2030, which is about equivalent to the entire East Coast demand. So we've seen what the gas shortages on the East Coast have done to prices there. South Africa already has premium pricing at around $6 to $8 per gigajoule, and so you've got a large market, but also a premium price market that you can access. So, along with that, you've also got very, very good fiscal terms. So that's also important. You need to know, as a company, when you're investing, ultimately what your return is going to be, because you've got to compare it against where else you can invest across the world, because it is a global industry that is a competition for capital. We've also got an excellent relationship with government. Quite often you're in places where it's quite an antagonistic relationship between resource companies and governments.
I think it's like that in any sort of wildcat territory to some extent, isn't it?
It is. But I think the government in Zimbabwe, having been through a period where there hasn't been much foreign investment over the last 20 years, have now decided that they need to bring in foreign direct investment back into the country to get the economy back on its feet.
Yeah.
It's got a long established history as a mining jurisdiction, over 100 years. So they're well versed in the resources sector and what's required there. And in the mines minister, Winston Chitando, he was brought out. He was running one of the big platinum miners in the country, and has been brought in to the ministry, to help government spur that investment. So I call him a poacher turned gamekeeper. But he understands what's required from an investment point of view for companies to commit money.
Yeah.
And so it's great to have a government now that's supportive of investment, and also someone that's in the hot seat that actually understands what's required from an industry point of view. And I guess probably lastly, again, is the infrastructure in place. So, we've got a tarred road that goes all the way into the basin.
Yeah, so you don't have to build a giant long road yourself.
That's right.
Yeah.
So quite often, particularly in the interior of Africa, you don't often get any infrastructure, never mind good infrastructure.
Yeah.
So, we're very lucky that it's in very accessible. And that tarred road takes us all the way to Beira, deepwater port in Mozambique.
Okay.
So we can get equipment in and out, we can get product in and out.
Yeah.
And the majority of that highway actually forms part of one of the busiest trade routes in Africa, which is called the Beira Corridor.
Yeah.
And that's used to move bulk commodities from Zambia, all the copper that gets mined there, cobalt from the DRC, as well as Botswana, and Malawi as well. So it's a very well established road network that's in very, very good condition. So and there's also an existing pipeline as well. So that runs from Harare to Beira, and that currently imports liquid products from Beira into Harare. That's used as then a distribution center for the rest of those other countries as well, for fuel as well as local domestic consumption. So you've got a secured pipeline route. So if you're not going to repurpose that pipeline, you've got an easement and a route next to it, which is often the hardest thing when it comes to pipelines. Is securing a route and compensating landowners and getting the agreements and surveying it and everything else. So that really shortcuts a lot of that time. When we're looking at an export scenario and generating foreign currency for the country. So all of these things combined, make it a really attractive opportunity for a range of companies because of the scale of it, the entry cost, the monetization options, and also the premium pricing. So,
late last year, Invictus signed an agreement with Tatanga Energy to jointly investigate commercial viability of supplying gas from the Cabora Bassa project to a proposed gas-to-power plant that would then supply electricity for the national grid. How's that progressed?
Yeah, that's progressing really well. We've already identified some preliminary project sites. And, fortunately, we're only around 100 kilometres from 3 major interconnectors for the Southern Africa power pool. So from any of those sites, we connect into a grid that can export electricity from Cape Town through to the Congo. Yeah. And so, that's a really elegant near-term solution. Gas to power is very, very quick to, in terms of its development timeframe. Coal-fired power, you're looking at, 4 to 8 years sometimes.
Well, it takes ages to develop coal-powered stations, doesn't it?
They're difficult to finance, particularly at the moment where a lot of banks and funders are walking away from coal.
Yeah.
Personally, I've got nothing against it.
Yeah.
But
it's just a harder market.
It's a much harder market.
Yeah.
And so a lot of the proposed coal-fired power stations in the region are actually struggling now to attract finance, whereas gas to power is really in high demand and very in vogue. And that's for a number of reasons. It's scalable.
Yeah.
Nowadays you're not looking at bespoke technology. It's off the shelf, and you can, from 6 months in ordering a gas engine generator or turbine, you can have that delivered to site and you're ready and going, and you can bolt it on and increase it as required.
Yeah.
Whereas coal, you're looking at a minimum sort of size of 400 to 500 megawatts. Yeah. Securing the offtake agreements in place for that and the financing and everything else. So this this venture that we proposed with Tatanga has got that sort of stage component to it, and will enable us, to monetize that pretty quickly because of the proximity to the grid, and also, some of the partners that they're bringing in, who are the manufacturers of these kind of facilities as well. So.
Let's look at where you need to go to get there, I guess. What are the next few steps for Invictus in bringing this asset into development? I mean, it's still, I'm not going to say early days because it isn't, but there's still a lot of work that needs to happen.
Yeah, there is. There's, we're hoping to conclude that farm out process and bring in a partner very shortly. We've got our environmental impact assessment, which should be approved imminently.
Yeah.
There were a couple of delays with COVID and everything else going on and preventing the agency from getting out into the project site. Once that's done, we can start the detailed drill design and our field work that's required. We'll probably acquire some infill seismic as well, just to refine the subsurface drilling targets, and then drill a high impact basin opening well.
Yeah.
Hopefully 2.
Yeah.
And prove up the resource, and then we're off to the races.
What's the cost involved in drilling those first 2 wells? I mean, obviously 1, but hopefully 2.
Yeah, so we're looking at a couple of different targets.
Yeah.
Imsarabani, obviously the big one that we've been talking about, and that will, we've got a range of estimates there, which sort of run from about 8 million out to 16 million, with a median price of about 12.5. million US, and then there are some shallower targets as well in some separate prospects that we're looking at, which will in the sort of 6 to 8 million range. So it's very manageable compared to it sounds like a lot of money, but in oil and gas
it's not a lot of money.
It's not a lot of money.
When you've got Santos drilling a well for about $100 million in the Northern Territory, it's it's a little bit different. Isn't it?
This is pretty modest by industry standards.
Yeah.
So.
Yeah. Oh, that's fantastic. I noted you also had a cash raise earlier this week or last week, raised about $500,000.
Yeah, and that's we've brought in some local institutional investment from Zimbabwe.
Yeah.
Called Mangwana Opportunities. They, we've been talking to them for a while. They're very interested in the project. It's very difficult in Zimbabwe to get exposure to something like this. There aren't any listed oil and gas companies or any other oil and gas companies active in the country. And we brought them in for a number of reasons. One, I think it's great to have local institutional ownership. Particularly because our company is really focused on Zimbabwe at the moment.
Yeah.
And there's probably the perception that we're a foreign-owned company, even though we've got very strong Zimbabwean roots, being Zimbabwean myself. Brent Barber, our country manager, ran Mobil's exploration program there, and actually did a lot of the early work to get them involved.
Yeah,
and he lives there and runs a project for us there on the ground. So, we're sort of sometimes unfairly labelled as a foreign company.
Yeah.
And, we're obviously listed here and headquartered there, but got strong Zimbabwean roots. So it's great to have then some more local ownership involved. And then also, Mangwana have got some very, very high caliber people in their fund. And particularly at a time like this where we don't have the ability to travel and help move things along, a guy like Joe Matizo, who's one of the most senior businessmen in the country, he's able to help us get things done there.
Yeah.
And so it's been a good partnership so far. And, they've got the ability to put more money in as we progress. And, initially that's just for our sort of field work activity coming up, as well as some local CSR initiatives that we're involved in there. COVID relief, some work with the schools there, as well as upgrading some of the facilities in some of the local communities there. So
when are you looking to spud? I mean, that's the big question that I'm sure a lot of people have in their minds.
That is, yeah. So it's been a little tricky to get definitive timelines at the moment. The borders are shut in a lot of countries, and we've got to move equipment in from outside of Zimbabwe. So, but our best estimate at this time is probably towards the end of next year, before the rainy season, or else very early the following year.
Yeah.
So Yeah, and then it'll be a pretty exciting but also nerve-wracking time. It's it probably doesn't get more exciting than frontier wildcat drilling. So,
well, one of the catalysts, or one of the way that you calibrate a lot of projects is often by a chance of success.
Yeah.
What's your chance of success? Do you know, for your first well?
Yeah. So, if you're looking at individual horizons, within them, it's probably around that 10 to 15% mark.
Yeah.
But because we're chasing a stacked target,
that
greatly increases your chances of success, because you've got multiple combinations of reservoir, trap and seal.
Yeah.
And so, when you're looking at these stacked targets, then you tend to get more towards a sort of 35% range.
That's remarkably high. I mean, sometimes our listeners may not know, but anything above 30% is often, quite remarkable in the oil and gas industry, and they don't necessarily understand that.
No, I think particularly that's been lost over the last 10 years or so with the shale revolution, where people kind of look at geological risk, and they don't want to deal with it.
Yeah.
And because you've had hundreds of thousands of wells drilled in the US and the geology is very, very well known, there's very little risk. But the only way to make transformative discoveries is to go into these undrilled basins, which, if you're the first entry into them, you generally secure the best areas and the biggest targets.
Yeah.
Which is what we've done. And so the concept of this geological risk is a method that we use, to estimate what the chance of success. In reality, though, it's either there or it's not.
Yeah.
In spite of how well, because your percentage is always wrong.
Yeah.
If you make a discovery, it's actually 1.
Yeah.
If you don't, it's 0.
Yeah.
And so it's probably better used as a qualitative tool to rank your prospect inventory, rather than your absolute chance of success.
Yeah.
So, if you're prepared to take the risk, and I think for this opportunity, it's more than warranted because of the size of the prize. We've got all the evidence of the petroleum system there that we've sampled from outcrop. All the geochem work we've done, all the basin modeling work that we've done, and the evidence that we see on seismic from from AVO response, etc. You've got to do it. And this target is so big that if it had been anywhere else in the world over the last 20 years, it would have been drilled already.
Yeah.
But it has been locked away and out of reach from industry. And, we've been fortunate enough to be able to go in and because of our roots, been able to secure it first and now kind of bring it to light in the industry. And I think a lot of people initially, when you talk to them about the size of it, are really surprised, and they see that massive, whopping, great big structure on that seismic line, and they're like, well, why hasn't this been drilled? And it's because not for geological reasons, but more for political and above ground reasons. That's been
industry's been locked out. Yeah,
exactly,
for a long time.
But if you're prepared to do it, you can go and make these transformative discoveries. Hardman in Mauritania and Uganda. Tullow in Uganda and Kenya. You've had Cosmos, even here in Western Australia with Carnarvon in the Beedu. That was a pretty underexplored basin, and everyone had written it off.
Yeah.
And with the work they did with de-risking it and drilling a couple of wells, they've ended up making this fantastic discovery. And then sometimes even in older basins, people have these preconceived notions about what your sort of economic basement is, and everyone in the Perth Basin said, below 3,000 meters, don't bother.
Yeah.
And we've had Waiatia and now West Erregulla, which is
their wells drilled to 5,000 meters.
Yeah, and they're probably the best reservoirs in Australia onshore by daylight.
Yeah.
Waiatia 4 that I was fortunate enough to be involved with flowed at 90 million cubic feet a day.
Yeah.
And that was barely broke a sweat. So it's so you can go into these kind of areas, either frontier basins that haven't been explored or been lightly explored, or into older basins which haven't properly been explored or have been closed off to sort of new ideas. and make these huge discoveries.
Yeah.
And that's what Invictus is about. We're not looking to go into unconventionals and be workmanlike and chase these small targets. We're going after something which will be company changing, and also nation changing if it comes in. So we're very excited and looking forward to the forward work program.
We've talked about, Dorado and Waitsia and all of these different things. Both the Dorado discovery and Waitsia resulted in takeovers and, people's market caps. I mean, you look at Carnarvon Petroleum, this micro company once upon a time, suddenly having a market cap, 18 times the size of it. What do you anticipate would happen if you really do strike gold, if you hit the jackpot?
Look, obviously, that'll be a fantastic result, and I really hope, for the sake of not only the company and our shareholders, but for the country as well, that it does happen. Anything can happen. I think probably being a single asset focused company at the moment, there will be some eyes cast over it if it does come in. I think something of that size becomes pretty strategic, as from an M&A point of view. But we'll cross that bridge when it comes.
We'll wait for you to drill the well first, shall we? Scott, we are out of time, but thank you so much for joining me.
Paul, thanks for having me.